This is January 2026 and this is Card Chief here before me. Card Chief is the Canadian dollar against the Switzerland franc. Okay, this happens to be the first trade of the year for us, RightWayTraders 2026. This is the only trade we've taken so far and it was a loss. So in this video I'm going to explain what happened in this trade, the pips loss, and how many days we held this trade. But before then, we dive into today's topic. I'll be talking about diversification in forex trading. So guys, welcome back again. If you are new to this channel, we are RightWayTraders. We tell people how to trade the forex market the right way with proven results and track records. We don't just do that, we also give evidences of our trading results as it's going. So after I finish explaining about diversification in forex trading, I'm going to show you our trading results so far for the year 2026. Remember, our results for 2025 was a very sweet one. Okay, we made a very great result 2025, so we are anticipating for a better one this 2026. We just started with Card Chief. So before we go into our trading report for this first week of January, let's talk about why diversification in forex trading is important. When you are talking about diversification, you are talking about splitting your portfolios, not depending on one pair. I see this all the time online. Some people focus on just trading one pair, especially the gold pair. Not a bad thing to be focused on one pair. In fact, it gives you the ability to master that pair for a very long time and see how it behaves. But on the downside, you are restricting yourself from other opportunities. Okay, I tell people all the time, especially if you are trading more like the way we are trading here. We don't trade conventionally like trading on the lower time frame. If you see this on my chart, this is a daily time frame chart. Okay, we trade, each candle here takes 24 hours to form. So if you are trading in this manner, you are likely going to have lesser trade if you just focus on one trade. Okay, so if you look by my right hand side, you will see number of pairs here. These pairs are the forex major 8 currencies. If you combine them in pairs, they'll give you 28 pairs. Okay, these are all the pairs we trade, and we don't just trade all of them at once. Why do we have to trade all of them? We are giving ourselves that room to get opportunities in any of them that will likely move. Okay, so not depending on one does not mean that we are over risking. We are just giving ourselves the opportunity to catch the trend. If the trend is not on gold, it may be on forex. Not on forex, be on Bitcoin. Even in the forex, there are different pairs that particular trend may come. Okay, so that is the importance of diversification. Now, the downside of not diversifying your trade portfolio is that your trade will be slow. You'll be trading very slow and you depend only on one pair. Your risks will be so much because you are depending on one pair. If you are trading multiple pairs, you see that your risks will reduce, because in case this pair is giving loss for a period of time, the other one will be giving you winning. Because you diversified your portfolio, you are winning here, you may be losing small on other few places, but your winning combined will cover the losses. But focusing on one pair alone, like the gold, so whenever the gold is losing for a long period of time, you will be on that losing streak for a long period of time, and there will be no other markets to give you benefits. Okay, so this is what I'm trying to say. Diversifying your portfolio gives you more opportunities in the market to select. Okay, so I'm going to tell you the right way to diversify your portfolio while trading. You don't just trade everything at once. Okay, I'm going to be giving you simple steps on how we do it. Another one advantage of diversifying your portfolio is that you don't have to be dormant. You are always active in the market, just like the way we trade. We trade one trade, okay, per time. It doesn't mean that we are focusing on one pair. So any pair that gives us the opportunity to enter, we enter with our money, then we wait for the results before we take another one. But in searching for opportunities, we have different options to seek for opportunities in the forex market. So this will make you more active in the market if you diversify your portfolio. Not diversifying it make you dormant in the market. So I'm advising you, if you're trading on one pair, just follow these steps that I'm going to give you if you want to diversify your portfolio and trade more pairs. Okay, in diversifying your portfolio, make sure from the very beginning you choose the products you want to be trading. Okay, like for us, we've already taken 28 forex pairs. We don't go beyond that. Bitcoin and gold. So if you combine these pairs, it's going to give you 30 pairs together. So you have to make your choice and choose the ones that you want to trade and make this final decision before you start. Don't just at the middle of trading you find a new pair, you say okay, I got to trade this one. You need to make your research, choose the ones that you are willing to trade and select them to be under the portfolio they are going to be investing on. Okay, that's the first step. And the second step, whatever strategy you are using in trading is going to be the strategy used in all of them. Okay, this will keep you consistent. Okay, so it will keep you consistent in such a way that it will depend on the pair movement and not only your strategy. So some pair may not move, some will move. And then lastly, whatever risks you are risking for a given product, maybe you have been trading a single product, whatever risks you are risking there, if you want to diversify your portfolio, make sure you are using the same risks in those other portfolios that you are risking on. Okay, sometimes you may want to reduce your risks depending on how you see that product or how you backtested and see the performance of that product. You may want to reduce your risk on a particular product. Okay, so it ranges, your risk level ranges, but make sure, since you are trading a single pair, make sure it is relative to that single pair that you're trading. Like for example, if we are trading in the forex market, whatever forex pair we pick, we risk 5% on every trade for that forex pair. But if we are trading on gold, we risk 2% of our trading account, because gold is volatile, and so we use a high level of profit taking on gold. So that's why we reduce our risk level. It also, for Bitcoin, we also reduce our risk level to 2% per trade. So that is that in how to go about it. Make sure you're not trading just a single pair. Split yourself, put yourself in a position to be able to catch more market opportunities. There are so many opportunities in the market. Make sure you're able to catch them as the year runs. Okay, now going back to our trading recap for the month of January. This is the first week of trading, and the only trade we got so far happens to be a loss. It was a loss not because it hit our stop loss, but because we closed it early enough on a loss. Okay, so this trade we took it on Tuesday the 5th of January. We took it on Tuesday the 6th of January, but we got the signal on the 5th. So the next day, immediately the candle closed, the next day we entered this product. It lasted for 3 days, so we held this trade for 3 days and we lost 14 pips on it. Why did we close it here on Thursday? That's because Friday candle was supposed to be a major news event that we don't trade on, so we had to close it on this particular candle. We didn't use the exit indicator to exit from this trade, so we exited because of fundamental news event. So you have to introduce fundamental analysis to your trading to help you secure profits in the long run. Okay, so normally our stop loss is supposed to be here, but we'll close this trade here. So if our stop loss is here, that will be about how many pips? Let me show you so that you understand the percentage you lost on this trade. This is 40 pips stop loss. Okay, but we closed it at the close of this candle, which is about 14 pips loss. Okay, 14 pips out of 40 pips in 5% risk is about 1.75% loss. So total loss on this trade was 1.75%, risking 5%. Okay, now that will be a different loss if you are risking 10% and 15%. If you are new following us, our risk level is normally different depending on the size of your account, ranging from 5 to 15%. So the amount lost on this trade was 1.75% if you are risking 5% of your trading account. So starting from this year 2026, we just credited a live account of capital $5,000. Okay, $5,000 trading capital. So I'm going to be using it to show you. If you see here, this is the current balance. Initially it was $5,000. Okay, so this is the account I'm going to be using in explaining our trading as it goes. So you see the profit and loss so far. So this is the trade, the card chief trade. Okay, it was a sell trade. We took it on the we closed it on the 9th, we took it on the 6th. Okay, so the loss is $70, like what I told you guys, 1.75%. $70 out of $5,000, but this actually closed a little bit lower. That's why the percentage loss is a little lower. Okay, so $70 was lost on this 5K account. I'm just showing you guys so that you see the progress of this account and how we build it, doubling it before the end of this year, we'll likely double it, or mostly may get 50% of it, because we are using lower risks. We are using 5% risks on this trading account, guys. So this is the outcome of the trade card chief. $70 loss on a 5k account, just a single trade for this week. Any other people have taken a lot of losses in a single week. I know of a trader that trades up to 20 in a single week, but we just took one and we took a little loss. So we are looking forward to next week. Now this is a drawdown for us, but remember December was also a drawdown, the last month of 2025. But I can assure you, just 2 trades will bring us out of this massive drawdown that we are right from January. Of course, this one is a minor drawdown, so a single trade will clear it and give us a major profit. So I'm sticking forward. We still have 3 more weeks to go in this January. We will likely get 3 to 5 trades this January before it closes. Only 2. We just need 2 winnings to bust out of this drawdown that we are in. Okay, that is how trading is. Sometimes you have lower period, sometimes you have higher period. 2 trades to come out of this. So that is that, guys. Keep following us, keep following our trade. We always post our trade in our major VIP Telegram channel. That's where we drop it, the stop losses and the lot size to use and everything. If you are new to this channel, view the description of this video and follow the website in there so that you understand our methodology in trading, our philosophy, how we trade, how we see trading, how we fight it, and how we make money from it. That'll be that for now, guys. See you next week.